audio is broken because should I whistle while I work? Well, you know, I'm concentrating on getting. I got 7 cameras to get set up. I got two screens, and it's kind of interesting. What? It's I think they do. They do it just to piss me off. Well, I do have my soundboard, and the soundboard, I don't know how to program it yet, but there's 8 buttons on there that I can pre-program it for some interesting little sayings like "get the out of here," or you know, or that bleepity bleep bleep bleep, you know, that kind of stuff. Yeah. Okay, I'm gonna take you out. I'm gonna blow you up. And he presses a button, and it sounds like a big explosion. So when someone says something just to piss you off, I'm gonna blow you up. And press the button, and they explode, and they're gone. Well, I got to remember that one. As soon as I learn how to use it, I can turn it on, plug it in, and then the lights come on. But where do I go from there is beyond me. Okay, what am I doing? Hey, and there's all the lights. Okay, but how do I use this thing, and how do I program these buttons? Because these buttons, you're supposed to be able to push a button. Anyway, I'll got to figure out eventually. I mean, I got all these neat little toys. Can you break down your weekly trades? Jake, yes, I can. Hold on a second, Jake. We're going to get there in a minute. So you guys over here on stream, I'm going to mute you guys so that we can get rolling. Yep, you guys are all muted. Cool. So anytime you have any questions, just unmute yourself and just ask away. All right, so I think that's everything. Let's get started. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks in just 10 minutes a day, looking for a simple, safe, predictable, consistent 1% per week. Now, we picked out 5 stocks earlier during the week, and we're going to take a look at them tonight. Let me just give you a quick breakdown of which ones they were. We had Ford, Apple, United Airlines, CVS, and Humana. So today is Thursday. So tomorrow is Friday. We're not going to know exactly what's going to happen until Saturday morning. So Sunday night, when we log back in, because I'm not going to be here tomorrow night and I'm not going to be here Saturday night. But on Sunday night, we will take a look at which stocks, the 5 stocks that we did pick up, you guys in the audience picked out this week, and we'll see how they performed. But next week, someone mentioned that I should actually open up a paper trading account and just doing paper trading with you guys specifically. So you could pick a stock, okay? At the end of Sunday night, we'll pick up 5 companies, and we'll put them into the chart, and then we'll just run them through. And every week, we will see which 5 you guys pick and see how they perform. All right, that being said, let's jump in and say hello. Hey, hello to my little friends. It's not me. Eric, how you doing? Hamdan, what's going on? Hammer down. Super Bike Guy, what's going down? Gordio. Mike in Love. Way to go, Mikey. Marlo, what's happening? Digital Go. I have no idea what that means. Asim. Good afternoon, Asim. Samantha Riley, good evening, good evening. Mark, good evening. Bring it on. Teacher, what's going on? Estivio, what's going on? Pampering my Paula. Mikey G did more VFC, which is 2 days. Cool beans. Mikey, we're going to take a look at VFC, see how that worked out for you. Let's write that one down, VFC. It's already written down. We'll take a look at it in a little bit. Haphazard, how you doing today? BB, what's going on? Coco, how are ya? Jake T. Jake wants to take a look at the weekly trades. We'll take a look at that in a little bit. Chris M., how are you doing today? Am I on Eastern time? Yes, I am. Melatonin, what's going on, brother? How you doing today? So, Mux Capital, YouTube channel dividend stock is not online. Uh-oh. Yep, it's not streaming, damn it. All right, give it a few seconds. Okay. Keep me informed. In a few seconds, it should pop up. I forgot to hit the button. Swan, what's going on? Tick, what's going on, Tick? Raul Trulio, good evening, Raul. David, Cajun, Dark Horse, Mark, Ran, what's going on? Waffle House Granny Witch. Howdy doody, how are you? Waffle House Granny Witch. I wonder where you're from. Because I'm kind of curious. You're an I-95 going north. I'll stop by and order some waffles. I like Waffle House. Uh-oh. Jacob, energy transfer. I don't do energy transfer anymore, and the reason being energy transfer, the strike prices are just horrible nowadays. So we don't actually do those anymore, energy transfer. Let's take a look at energy transfer, and I'll show you why. Right there. All righty. All righty. Now, the reason why I don't do energy transfer, take a look at these numbers here. If you're right on the money, 18, the 18 is going for 12 cents a share. No. But look at the 1850, 3 cents, and then the 19.00. Yeah. See, energy transfer, I don't know who took over, but somebody took over, and then just the premiums on the covered calls are just horrible. Now, energy transfer, ET, is not the only one. I believe AGNC is the same thing. So let's take a look at AGNC for a second. AGNC. Yep, same thing. Check it out. 1 cent, 0.00. So I don't do AGNC and energy transfer anymore. I like companies that have great premiums. Look at Dell. Okay, 257, 211, 171, 138. 138, 4 strikes out of the money. The stock is at 111. 4 strikes out of the money, I'm still getting 1%. Energy transfer, on the money, I'm getting crap. 1 strikeout, I'm getting nothing. 2 strikes out, nothing. So you got Dell, who else? INTC. 51.30, 16.9. So it's at $20 now. Even 2 strikes out of the money, I'm still getting 1.5%. And so I'm sorry, dude. Energy transfer and I just did it. Anyway, energy transfer. The numbers just don't work very good anymore. So Jacob, EOG. Okay, at least those premiums are good. Look at those. 145, 105, 70, 45. 4 strikes out of the money, 45. Well, fine. But energy transfer, no. The number's just terrible. AGNC and energy transfer, no. Thoughts on KRP? KRP in Cincinnati. Ooh, I love KRP in Cincinnati. With Lonnie Anderson. Ooh, hot chick back then. She married Burt Reynolds, didn't she? Alyssa wants to take a look at Target. TGT, Target. Okay, first one on the list today. Let's do some Target. TGT. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Up, down, sideways. 94. The 94 is going for 160. 160 is over 1.5. Now, 1.5%. I'm talking weekly. So if you're not familiar with what we're doing weekly option strategies on qualified dividend stocks. Now, when I say qualified dividend stocks, I mean companies that have been consistently profitable for more than 2 decades. Well, that's 20 consecutive years. So imagine this, if you will. Every Sunday, we take a look and see how many companies are available to buy stocks on. How many? Well, this week it was 10,043. That's a lot. But I'm only looking at about 300. And the reason why I'm only looking at 300, because that's the only amount of companies that are consistently profitable for at least 2 decades and have weekly options. Okay, there's a lot of trading strategies out there. It's online now. Thanks, Muck. Jake, is dividend investing a good retirement idea? I'm new to this stuff. All right, Jake, look at it this way. I'm 61, going to be 62. Okay, I retired at 59 because I had enough money to earn 1% a week, which covered all my bills. Okay, now most likely, full disclosure, how are you today? So, as I was saying, at 61, I have enough money so that 1% of my account. I'll give you, for instance, hold on a second. I'm not used to talking so much, so all this talking every single night gets to my voice, and then my vocal cords hurt, so I got to have tea with honey every night, soothe the, anyway, besides the point. So anyway, Jake, if you think about it, okay? Now, I've been working since 1973, and I have to admit, my savings towards my retirement was crappy. I didn't actually really start saving for my retirement since the last 3, 4, 5 years. That's about it. Think about it. 3 or 4 or 5 years, I came up with enough money to be able to retire at 1% a week. So if, hypothetically speaking, you have $50,000 in your account, 1% of $50,000 every single week is $500 a week, or $25,000 a year. So at $100,000, that's $1,000 a week, or $50,000 a year. Now, you're gonna have to figure out the tax thingy, but if you put it in a certain way, like mine's in a corporate tax, so my trading is in a corporate account, so it's taxed on a corporate level. Now, also, profits on the corporate level can be offset by corporate losses. So for you, Jake, you got to figure out what is the best way for you in your retirement. Now, you got 2 choices in retirement. One, you can rely on someone else to give you your money every single month, or you can take control of it yourself. Now, if you're on Social Security, believe it or not, there is a way where you can petition the Social Security office and say, hey, give me my money, I will take care of it myself. There is that possibility, but it's a long process from what I understand. I haven't done it. I'm thinking about doing it because I'm not eligible for, what do you call it, Social Security for a couple more years. I'm only 61, so get all that money sitting there. The government has it, and they're doing whatever the hell they want to do with it, but it is what it is. Okay, so I hope that helped you out there a little bit. Jake, what platform do I use? Well, this here is Thinkorswim through Charles Schwab. I also use a Robinhood. So those are the 2 I use. I wrote a book 15 years ago, Choosing the Right Trading Platform for Your Style of Trading, because we're all different. Does it have E10? Calvin, you're going to have to explain to me what E10 is. Haphazard, I know you're in Florida, but is that a northern accent? Bostonian, my boy, will we park the car in Harvard Yard? we parked the car in Harvard Yard and we have no idea what you're saying. Because it's wicked pisser. Yep, that's Bostonian for you. My family's from Scituate. Cool beans. Scituate and Marshfield right next to each other. Can we review KRP? Jacob, why are we looking at KRP? Okay, Calvin, E10 D's nuts. All right, Calvin, thank you. Next, we're going to take a look at KRP. I have no idea why we're looking at KRP. We haven't even finished up with... All right, KRP is a definite no. I don't do monthlies. Okay, 20 June, 18 July, 19 September. Those are months of the year. I don't do monthlies. It just doesn't work. Okay, sorry. So let's go back to Target because we didn't finish up with Target. See, here's all the numbers, the high, the low, where was it, where is it? Look at the motion. We've seen all that. currently at 93.52. The 94s are going for 160, well over 1.5%. Well, great. 1.5% is over, what, 75% a year? Jacob. Okay, I appreciate it, Jacob. Could you do me a favor? Don't be so juvenile, okay? I'm not into those elementary school thingies, but you did. All right, I'll have to hand it to you. Suspicious, what's happening? Seer, what's all going on? Mark, David. Tick-tocking, what's happening? Break shoe, cool beans. Okay, Big Brain, Enbridge for the win, just collected my dividends. Okay, so Big Brain, you like A and B. There's nothing wrong with it. Go ahead. All right. So let's take a close look at Target. I get back on track before I get into that silliness. All right. A year ago, 148 for Target. I gotta tilt that just a little bit. It's reflecting on my screen. And oh, you know what? I'm going to do that right there. And I'm going to move this screen right there. Nice. Now I have no reflection on it. All right. Now I can read it much better. All right. All right. So Target is a dividend king. Now, if you don't know what a dividend king is, let me refresh your memory for a little bit. A dividend king is any company that has consistently increased its dividend payments to its shareholders. Once you buy a share, 1 share, 1,000 shares, 1,000,000 shares, doesn't matter, even 1 share, you become part owner in Target, which entitles you to a portion of their profits. Now, they pay out their profits in the form of a dividend every 90 days or once per quarter. Okay, quarter. January, February, March, quarter 1. April, May, June, quarter 2. July, August, September, quarter 3. October, November, December, quarter 4. We are currently in the 3rd month of the 2nd quarter. So at the end of this quarter, the end of this month, just so happens to be the end of the first half of the year. Okay? So that being said, let's take a better look at Target. A year ago, like I said, 149. The high of the year was in the end of August at 167. The bottom is right here in April, okay, the 8th of April at 87.39. That's the bottom of the year for Target. Okay, well, the top, let's look at the last 30 days. Okay, here's our last 30 days. Now, the reason why I look at the last 30 days, because it gives me a good idea of where the stock, hypothetically, looks like it's going next. Because we investors, we're kind of a fickle bunch. We buy, we make our profit, we sell. Okay, when the stock drops, we buy, stock goes up, we sell. Now, there's a lot of people, everybody here has a different objective. Mine is a 1% every single week. Now, whether I get that from a dividend, a stock option premium, or capital appreciation, meaning the stock goes up, I honestly, really 100% don't care where it comes from. I'm just looking for the 1%. I like to buy on a Monday, and I like to be out on a Friday or Saturday. Now, what works best and easiest for me is the covered call. It's one of the easiest, safest trading strategies there is. And considering it's Thursday, okay, I won't be here tomorrow, I won't be here Friday or Saturday. Let's take a look at the princess to give you guys, those of you who don't know her, let's go, and we're going to see where the trading strategy came from. Okay, so the 10-minute trader, that's my website. All the fun stuff's on there. You guys been online long enough to know all that stuff. You want to buy something, that's where it is. I'm not trying to sell anything, okay? So let's get that out of your head at the moment. Now, here's, YouTube. Yeah, we just went by all the social media, blah, blah, blah. Okay, so videos, here we go. oldest videos, and here she is right here. Now, hold that thought for 1 second.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad doesn't let me call it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting.
Now that's me, 15 years ago. I had a lot more hair. See that? A lot more hair.
Every single day you buy different stocks. Every single day there is a different company paying out
It's my favorite part. Oh, think about it. How else am I supposed to keep a 9-year-old entertained? We had a lot of fun shooting these videos 15 years ago when she was little. Okay. So the thing was, in 2008, my 9-year-old daughter, which you just met her, okay, she jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" Okay, so when a 9-year-old little girl asks Daddy, say, "Daddy, can you teach me what you're doing?" Okay, so most adults don't get it. Most adults don't know how to invest in the stock market. Most adults are intimidated by it. So how do I teach a 9-year-old how to invest? I mean, come on, think about it. When you own a stock for the EX dividend date and sell a call and it does not get called, Cajun, I have no idea. That sounds like a statement, not a question. Okay, if you have a question, fine, ask it. But that's more of a statement. So as I was saying, to teach a 9-year-old how to invest in the stock market when most adults don't get it. So I had 5 criteria I had to overcome. Number 1, it had to be simple because she's only 9. Number 2, it had to be safe because I didn't want her losing money because she'd get unhappy, she'd cry, I'd feel like crap. Mom would get involved, I'd be sleeping on the couch. We know how that goes. Okay, so Cajun, whoever owns the stock on the date of a record is entitled to the dividend. Number 3, simple, safe, predictable. I want to know what I'm making before I even do it. 4, consistent. Well, I'm going to show you how consistency comes into play because retired, I don't work. I don't go in punch a time clock anymore. So my money's got to come from somewhere. So I stepped in and said, you know what? I can do a better job than you guys because I was going to give all my money to a, what do you call that? A money manager or a fund manager. And they said, oh, great, we can do that for you. We can give you X amount a year. And I'm thought to myself, I can't live on that. Let me figure it out. So for my daughter, simple, safe, predictable, consistent, no way for her to lose. You get that? Simple, safe, predictable, consistent, and no way for her to lose. That was for my 9-year-old. Now, I just showed you a picture of her. That's her. Now, she's 20. She's going to be 26 this year, and no, she doesn't trade anymore. At age 13, 13-year-old girls are no longer interested in hanging out with their dads. I don't know if you guys know that. But from 13 to 23, Dad was the local ATM. That's it. Okay? But anyway, that's how it all started. And the trading strategy, because when the years that she was trading from 9 until about 13, it was like consistently earning money to a point where I said, you know what? I'm not even going to do what I'm doing anymore, and I'm just going to do this. So I'm getting 50% a week for the last 15 years. 50%, not a week, sorry. 50% a year for the last 15 years. That's 1% a week. It's boring as hell. You may think it sounds interesting, but here's the thing. 5 or 10 minutes every single day. You get up, you wash, you brush your teeth, you have your breakfast, get your coffee, maybe get something to eat, shave, shower, whatever you want to do. And then before you get rest to go to work, you sit in front of your computer for 5 or 10 minutes. Now, 5 or 10 minutes after you figure it all out, because it's kind of like a new language, a new scenario, a new situation, a new terminology, thinking out of the box. Because what I'm doing here, I've never seen anybody else do it. And I watch a lot of people trading online. Some of it's very complicated, some of it's very, easy. But for the most part, I want something that is simple, safe, predictable, consistent, and I don't have to sit in front of my computer all day. That's what I'm looking for. So 10 or 15 minutes, I take a look at my account, boom, 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 thank you very much, and I get along with my merry old day. All right, so let's go, get out of here. Get out of here. What is this thing doing? Why is that on? Okay, it's streaming. All right, so we're streaming. Yay! Oh, but then. Let's get rid of that. Let's get rid of that. Let's get rid of that. Okay, all righty. So let's see what else we're looking at. Haha! Look at that here. Haphazard. I'm not quite sure what you're talking about. Ryan Johnson. Hello, and how are you doing today, Ryan? Nice to have you around. Full disclosure, nice to see you. Mindy, good evening. Dimitri. Miss Me. Mike, how you doing? Alrighty. Congrats, Goran. Good evening, Goran. Thank you for that. That was nice. All right, so what do you have? Hey, Lisa's here. Hugh, how are you doing, Hugh? You prefer your dividend daily. All right, good for you. Thank you for the explanation. You got it. ADM, Advanced, wait a minute, ADM. Archer Daniel Midland. Ooh, David, that's a good one. KB, what's happening? I don't know, Ryan. How you doing? John, let's go. All right, John, what are we taking a look at? John, we got John over here. We got Jonathan over there. Will, CB, Melatonin again. Melatonin, how many accounts are you signing up on? Smile, how you doing? All right, so let's keep on doing this. Bestow upon us your infinite wisdom. All right, Ryan, let's do that. Thanks for the explanation. I prefer my dividends daily. Good for you. Jake, do you hold dividend stocks long-term or sell them? Jake, I don't hold them long-term. I buy them just before the EX date. As the stock goes up, I do a covered call on them. I get a nice premium, and then I roll it forward until it stops giving me a profit. Because at some point in time, as the stock goes up, if you roll your option and you get 1% every week, at some point, they're not going to give you 1% anymore, and it's time to let it go. So, yeah, good company. Keep rolling it. Keep getting 1%. Can you repeat that, please? Can you repeat that, please? Can you repeat that? I did 3 times. There you go. I have no idea specifically, Tony, what you wanted me to repeat, so don't know what to do. All right. Can dividend be one criteria of buying long-term stocks? It can. I mean, you guys can do whatever you want. I mean, you can do whatever you want to do. Okay, I've been trading for over 20 years. I got to a point where it's like, you know what? I don't want to sit in front of my computer anymore. I want to pick a simple, safe trade, get the 1%, because 1% a week comes to 50% a year. So if I have 100,000 in my account, 50% a year is $1,000 a week, which is about $4,000 a month. Well, that takes care of all my bills, my monthly bills. And it gives me a little bit extra so that I can go do fun stuff with my kids and my grandson. And I don't have to go back to work, which is the funny thing, because I'm still working. You know, I'm going to my mom's house. I mow her lawn, take care of all the landscaping, and I'm even building her what do you call a she shed. But it's actually going to be a she shed tiny home, because the county came over and says, well, you can't stay in the motorhome, because I bought this nice motorhome for my sisters to stay in, when they're visiting my mom. Because nobody wants to hang out with mom. No, don't get me wrong. They want to be on the property, but they don't want to be in the same house. You know, when you're an adult and you move out, you remember why you moved out. So when you come back to visit mom, okay, it's like, hey, this is great. You want me to do what? No, I'm going to go to the motorhome and hang out. Yeah, well, the county says, no, you can't do that. So we're building a tiny house because they said we can. It's at certain dimensions, and it's fine. So we can't sleep in the motorhome, but I can sleep in the shed. Well, great. Well, let's put a refrigerator, TV, microwave, big screen TV, along with a bed in the shed. Well, the shed's big enough. It's a nice big shed. And they said, okay, but I can't have running water. And so, inconvenience. You walk from the little tiny house and you walk into the house and use it. Anyway, besides the point. You guys don't want to hear all that stuff. So I'm still working. I'm just not getting paid anymore. So that's what you got to look forward to when you retire. So when you retire, you still get to work. You just don't get paid. But it's okay because I work on my own schedule. This is kind of nice. Let's some more questions. What do you got? Lisa M., I got one for you tonight. ALB. Lisa Abelmal. I love Abelmal. Oh, so anyway, let's finish up with Target. So Target, as you can plainly see, 30 days ago, we're at 93. We shot up to 103, and then from 103, we're slowly coming down. So until it finds a new bottom, turn around, go back up again, we'll just keep our eye on it. Not this week, okay? Lisa, ALB, Abelmal. Love me some Abelmal. Let's check it out. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Down, up, sideways. 59. 59 is the current price at the moment. 59.43 to be exact. So the closest strike price is going to be the 59 or the 60. But take a look. 59 is giving you 3%. 60 is giving you 2%. 61 is giving you 1.5%, and 62 is giving you over 1% also. Well, I love it when the numbers look like this, because I love Abelmal. Okay, Abelmal, I did lose Abelmal. I did lose money on Abelmal 3 years ago, but I have traded it since then. So anyway, that was before I knew you could roll forward, because I didn't know you could roll forward until about a year and a half ago. And a year and a half ago, it's like, oh my, it was a game changer. Can you imagine that one trading strategy was like a total game changer? Now, don't get me wrong. Before I rolled it forward, I learned that strategy. I was still doing over 1%. But this rolling forward thingy, oh, it's like, that was definitely a game changer, that just one little thing. Okay. Wyatt, good evening. Walter Brown, how's it going? Ange, what's going on? Chad? Boat Doctor, what's going on? Lemonade, back again. Dale, it's the guy that says the N-word. Yep, next day, next November, nincompoop, nonsense, all that kind of stuff. Love your strategy, but those hollow candles, no. Okay, Ashley, not quite sure why you don't like hollow candles, but all right. Prasad, what if I invest in a dividend stock, dividend announcement date, but drops afterwards? What can I do? Well, number one, I don't collect the dividend. I'm not looking to collect the dividend, because here's the thing. Just hold on. We're going to need some viewing material. Viewing material. Here we go. You ready? This here is a calendar. We all can see that. But this is a specific calendar called an EX dividend calendar. It still tells you the days, Monday, Tuesday, Wednesday, Thursday. It still gives you the dates, 18th, 19th, 13th, 21st, blah, blah, blah. But what it also has is these little green dots. And all these little green dots represents companies getting ready to pay a dividend. So hold that thought for a second. Cajun, when do you roll over when the stock goes up or down? Cajun, we look at the numbers, strictly by the numbers. What did I buy the stock for? What's that now? Did I do a covered call? If so, which one and where is it now? So Monday, everything looks great. Tuesday, usually. Wednesday and Thursday, that's where things change a little bit, where we might need to roll into another week. So it's always going to be about the numbers. What did I buy it for? What strike price did I sell? What's it at now? And does it make sense to roll it into next week, or to let it get called away, or to let it expire? See, I can't answer the questions of a Friday afternoon, because options expire Friday, until Friday afternoon comes, because a lot can happen between now and closing time tomorrow. So we just look at it every day. So we got a live trading group every morning that we jump on and we take a look. Stupid question. So would I have to hold a dividend stock to get paid after the EX dividend date? Well, it's kind of hard to have a conversation with you because there's no name there. Well, I'm going to call you Wally. All right, Wally? Can you repeat that? So, Wally, could you briefly explain rolling forward? Oh, Chris, hold that thought. I'm going to get to that question in a second. Let's pause those questions. Let's pause these questions. And let's pause those questions so I can go through these examples and these explanations. Okay, so the question we had, all right, about the dividends and the stocks and when to buy. Well, I buy a stock 2 weeks before the EX date. And the EX dates are all these little green dots. Okay, so there's 4 dates to remember when you're talking about a dividend stock. Date number 1 is the announcement date. Hey everybody, this is James from Dividend Stock Talk. We made a great year. We made all this money, and this is how you're going to get your share in a dividend coming to you on this date. That's called the announcement date. That's when they tell you, this is what we made, and this is what you're getting, this is when you're getting it. The announcement date, date number 1. Date number 2, represented by these little green dots, is called the EX dividend date. That, my friends, is the last day the stock trades before the dividend is paid out. So if you wanted to collect a dividend on any one of these stocks, let's say General Dynamics right here, if you wanted to collect the dividend on General Dynamics, okay, which is, I don't even know when that one is, but it's right there, you'd have to buy it before this date. You could buy it the 27th, the 18th, the 3rd, the 13th, the 16th, 17th, 23rd, as long as it was before this date. Okay, that's date number 2, the EX dividend date. Last day before the dividend is paid out. Date number 3, this is the most important one, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Okay? Date number 4, self-explanatory. Payment date. That's when you get your money. Okay? 4 dates. You like that? 4 dates. Announcement date, EX dividend date, date of record, and payment date. Okay, so I don't like to collect dividends because here's the thing that I found in all my years of trading. Just before the dividend date, okay, little green dot, the stock has a tendency to go up in value. After the dividend date, stock has a tendency to go down. So I'm not really that keen on collecting dividends. But the reason why I use dividend stocks is a number of reasons. Reason number 1, I know when they're going to move based on historical performance and the calendar. The calendar tells me exactly when they're paying their dividend. So if I know they're paying the dividend on this date, I know when I should be looking. Okay? It's just that just makes sense. If the stock consistently goes up before they pay their dividend, well, that's a great time to buy it. And the nice thing about it, companies that are consistently profitable and increase their dividends, well, there's somebody out there, actually there's a bunch of somebodies out there that keep track of them. Okay? There's somebody out there that keeps track of all the stocks and how wonderful they're doing. Dividend Kings list. There's somebody out there. That's all he does. He continuously updates the Dividend Kings list. Any company that's increased their dividends for 5 decades, that's 50 years or more, they're on this exclusive list called the Dividend Kings. So you can't go wrong with a Dividend King. Now, granted, the dividend's not huge. The stock doesn't have big, huge swings. So how do you make your money? Well, you buy it and you sell it using a covered call, thus allowing you to capture 1% every single week. And then, of course, we get the dividend aristocrats, dividend champions, dividend contenders, and then just for the fun of it, to round it all up for a one-hand job, 5, okay, kings, aristocrats, champions, contenders, Buffett. Warren Buffett's list. If it's good enough for Warren, it's good enough for me. Okay? That being said, This is not my cat. I don't believe you. So I'm not quite sure what it is you don't believe. You don't believe my name. You don't believe this is a calendar. You don't believe. What is it specifically you don't believe? Okay. I love it when people just blurt out a comment, but have nothing to back it up. So I'm hoping, Cajun, that explained that question for you. It's always going to be, Cajun, it's always going to be about the numbers. Now, when I say about the numbers, okay, when you start investing, it's a whole new terminology. Okay, what did I buy the stock for? Did I sell a covered call? If so, what was it? All right, how much did I collect? What is the stock price now? And what is the option price now? And am I at risk of losing, getting called away, or I don't even know what the third one would be. It's either going up or it's going down, one or the other. But it always changes every single day, and we're always asking the same questions. Okay, but the nice thing about it is we have 300 different companies to look at in order to be able to say, all right, well, what's going on here? Or what's going on here? Or what's going on here? So that being said, let's look at some more, because I'm sure you guys don't want to hear me blabbing all day long. All right. Real rugged, do-it-yourself, drip. Yep, I got that one. Ashley, I'm glad I can entertain you. Oh, it's on the guy that says, okay, you got to get over that one, Delaney. Paul, GG, how do you roll over again? Oh, how do you roll? Let me see if I can. So you're here on YouTube with me standing in front of the screen. Okay, I'm standing in front of the screen. So I have 7 channels going, and only one channel has just the screen itself. So the screen is on the whole screen all by itself. All right. So you can go into your living room, your bedroom, wherever you have your big screen TV. Everybody has a big screen TV nowadays. If you have internet service on your television, which you should nowadays, because everyone should be able to watch YouTube on your big screen TV. So this is live on YouTube right now. So you'll be able to see the small numbers. Okay, you probably can't see them on your phone or your iPad, but let's go take a look and we'll do some things, but you're going to be able to see the smaller numbers. Now, this is being recorded on YouTube, so if you wanted to watch it later, just go to YouTube, look up The 10MinuteTrader, and you'll see I have over 1,000 videos there, and they're all dated. Jacob, is this a fake account? Jacob, I'm not quite sure if you're asking me if this is a fake account and I'm actually talking to you and answering your questions. Okay, Lemonade, do you let short and buy a call to cover? I don't short. Sorry, and I don't buy calls. I don't buy options. Jacob, you think that's funny? So, Lemonade. I'm going to call you Lemonade because LMND looks like lemonade. I don't buy options. I only sell options. I shouldn't say that because when I'm rolling, I have to buy the current one and sell another one. But normally I don't buy options because 80% of all options expire worthless. So why would I be buying? So if you had your choice, would you want to be on the 20% side or the 80% side? Now, granted, the 20% side is a lot more profitable, but it's inconsistent. Okay, 80%, okay, it's not as profitable, but it's more consistent. So when you're trading, and the interesting thing about trading, anyone can do it. We all have a different goal. Okay, my goal, simple, safe, predictable, consistent, 1% per week, but it's a very small, tiny niche. Okay, it's a very small amount. And there are literally hundreds of people out there just like me doing this exact same thing, live saying, hey, this is the way to trade, this is what to do, blah, blah, blah. Okay, but mine's a little bit different, and I'm sure everybody's a little different. I'm not looking for a huge amount. I'm looking for safety, predictability, consistency, and preservation of my capital. Okay, so if you are looking for cash flow, for what do you call it, capital growth, you know, where you buy a stock here and it just keeps going up, 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 and you got to hold it for a long period of time, you're in the wrong place. It's not what I do. I'm not monogamous to any stock. Okay? It means I'll use you, I will abuse you, I'll get my profit, and I'll move on to the next one. Albemarle, I love Albemarle, but look what it does. Up, down, up, down, up, down, up, down, up, down. That's all stocks do. So what do? I buy here where it's low, I sell when it goes up. I buy when it's low, I sell when it goes up. I buy when it's low, I sell when it goes up. I honestly don't really care because I don't. I mean, I like Albemarle. I will keep Albemarle in my Rolodex, okay? And when it comes back, see where it is now? It's up at this high right here. I don't buy at the high. I will wait for people just like me to say, hey, look, I bought here, now it's here. I'm going to take my profits. And when people take their profits, what happens to the stock? The stock comes down. So when it comes down, that's where I will buy it because it comes down, it will turn around, go back up again. So that's the time to buy. For me, do you guys got to figure out what is right for you? Now, I don't give advice. I don't tell people what to do. I just show you what I'm doing and I'll give you my opinion. That's it. All right? If you agree, great. Come along for the ride. There's a whole bunch of us, a couple of hundred of us that actually coming along for the ride. All right, that being said, can you expand on qualitative research? Chandler. Okay, Chandler, now I'm going to explain this to you simply as I can, and I'm hoping you'll understand it the first time I say it. What you are about to receive, what I am showing, was created specifically for a 9-year-old little girl. When my daughter was 9 back in 2008, she said, Daddy, what are you doing? Can you teach me? So you're asking a question, and I'm going to explain it to you the exact same way I explained it to a 9-year-old. Because I think, me personally, I could be wrong, and many people tell me I'm wrong. Okay, fine. I have no problem being wrong. Great. Stocks go up. Stocks go down. Stocks go up. Stocks go down. That is all they do. They do not come to your house, take the dog for a walk. They don't do the dishes. They don't sweep the floor. They don't vacuum the rug. They don't even hang drapes. They go up. They go down. That is it. So here's the thing. Pick a company that is consistently profitable and has weekly options. That's my qualitative research. That's it. Just 2. I'm only looking for 2 things, Chandler. Just 2. Consistency of profitability and weekly options. Other than that, I honestly don't care. Isn't that weird? I honestly don't care. 2 decades, that's 20 years of consistent profitability. And there aren't that many of them. There's over 10,000 different companies, and only about 300 fit what I'm looking for. But you know what? 300 is more than enough for me because I don't have enough money to buy thousands of shares of 300 different companies. So I'll buy a couple thousand shares of Albemarle, and then when I make its profit, I will say bye-bye. I will see you the next time. Because see, look, I'll buy here, I'll sell there, and I will wait for it to come back down again. When it comes back down again, I'll buy it again. When it goes up, I will sell it. When it comes back down, I will buy it. When it goes up, I will sell it. When it comes down, I will buy it. I don't want to hold on to anything. I have never, ever, ever seen a hearse go by with a U-Haul, which means whatever I'm taking, whatever I'm buying, I'm not taking it with me. So why am I holding on to it? I want profitability. Okay? I'm retired. I have no desire to go back to work. Not that I can't. Not that I just don't want to. I've been working since 1973. 1970. Some of you people haven't even been alive since then. So I've been working since 1973. I've saved up enough so I don't have to work. Now, I do still work once in a while. I just don't get paid for it. AJ, do you buy the Dividend Kings? Absolutely. Why not? Cajun, do you have a list of the 300 stocks available to buy? Absolutely. Cajun, you got a pencil and paper ready, handy? Hope so. Grab that lipstick out of your back pocket, dude. Anyway, here we go. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's about 300 companies right there. Go to Google, go to Bing, whatever search engine you use. Dividend Kings List 2025. Dividend Champions List 2025, so on and so forth. Okay. Semper Maximus, how's it going? Base hits all day. Real rugged do-it-yourself, cool beans. What you rely on most, fundamental or technical? All right. Setiker? I don't know. How do you pronounce that? Here's the thing. It's fundamentals that get the stocks onto my stock list. Okay? Here's my list. Each one of these little green dots. That's my stock list. In a calendar, tell me when to buy it. To get onto my calendar, the company first has to pass the fundamentals, which means they have to be consistently profitable. They got to have weekly options. They got to have a nice profit rating. They got to have consistency of profitability. So the fundamentals will get it to here. That's it. That's as far as the fundamentals will get them to the calendar. But what gets them to the calendar to me buying? Well, that's the chart. Okay? Why am I looking on the chart? The high, the low, where was it? Where is it? What's the direction it's flowing? Look, up, down, up, down, up. So right now, it's at the high. I don't want to buy it at the high. Okay, I want it to come back down again and then turn around before I'll jump in and buy it. So everything has its time and place. Right? So yeah, fundamentals to get onto my stock list. Okay? What do they call it? Flow. And a technical analysis to buy. So it's fundamentals to get onto the list. Once it's on the list, then I'm looking at the technicals. Okay, where's the high? Where's the low? Where's it going? And I only want to hold on to it for a week. Jacob wants to take a look at ExxonMobil. Okay, Jacob, I'm going to write that one down. XOM. Before we go very much further, oh my God, Felix, what is a Rolodex? Oh no. This is what happens when I'm trying to communicate with the younger generation. Okay, the funny thing is, it's not your fault. Certain things they just don't teach anymore. Okay, I mean, I know they don't teach cursive writing. Never mind, stupid question, actually. Hold that thought. So let me see if I can give you an idea what a Rolodex is. Now, before the invention of computers, okay, people would write down phone numbers on a little piece of paper, and they would put it into, kind of like a Ferris wheel type scenario that sits on your desk. So you put it into this little Ferris wheel thing. I know you know what a Ferris wheel is, and it would roll. So it would go A, B, C, and it would go all the way around to Z, A to Z, in a little like Ferris wheel, small Ferris wheel on your desk, little tiny business cards. And it's called a Rolodex. And as you roll it, get the A's, the B's, the C's. So you have all these business cards in this little autopilot. What the hell is that? Oh, TV would turn off automatically. Why was that saying that? No, I don't want my TV turning off. Oh, that worked. Yeah, so that's what a Rolodex is. It's just a way to categorize business cards. Lee thinks that's funny. Well, unfortunately, in the old days, before we had the phone with all the contacts in it, we had to write stuff down on pieces of paper. All right? Well, Peter Williams, good evening, good evening. Bondi, your momentum strategy may benefit from a non-directional strategy if you're looking for zero risk. Thank you, Bodie. I like that. Ryan, never mind. Stupid question, actually. Can we talk Walgreens? See, Matt, Walgreens got a buyout offer last year. And since that buyout offer went through, the premiums and the stock just wasn't profitable anymore. So we didn't do it anymore. But we'll take a look at it. Walgreens is WBA. WBA, Walgreens. Now, look at what it's been doing. Okay, here's the high, here's the low, here's where it was, here's where it is. Okay, we topped off at 16.5, dropped down to 8, which is a 50% drop. Then we shoot up, now we're at 11.25 for quite a while. Okay, so 11.25, look at your last 30 days. Not a whole heck of a lot happening there. Here's your high, here's your low. She shot up, came down, now it's just going sideways. It's at 11.25. So 11.25, 0, 2. So the numbers here are terrible. Ever since they had that buyout offer last year, we haven't traded Walgreens because the numbers just don't look right. So sorry, no Walgreens. Okay, AJSD, Misty, hype or reasonable? AJ, let's take a look at MSTY for a second and see what you think. Because I'm sure you're seeing some things, but you're not seeing everything. So let's go here. Let's go Yahoo Finance. I need my glasses for this one. All right, real rugged do-it-yourself. Base hits all day. I'm going to agree with you there, dude. Semper Maximus. Hello, Eric. Can you use this strategy for capital growth as long as you don't care about capital gains or can get around it? Yeah, why not? I mean, think about it. 50% per year on a simple, safe, predictable trading strategy that was created for a 9-year-old. If a 9-year-old can do it, you guys should have no problem. Let's go take a look. Yahoo Finance. Misty, right? Okay. AJ wants to take a look at MSTY. MSTY. Misty. MSTY. There we go. All right, so Misty's coming up. Now, I always tell everybody, if you're going to be investing, you really should have access to a financial website. I use Yahoo Finance. Gain, edge, market, ups, downs. Yeah, I don't even listen to that stuff. All right, so here we go. Take a look. Yield Max MSTR Option Income Strategy ETF. MSTY. The current price, $20.27. Fair enough. It's an easy price, right? Felix, that's 1930s. No, Felix, I hate to be the bearer of bad news. We still use Rolodexes in the 70s, 80s, and 90s. Okay, Rolodexes didn't disappear until somewhere in the 90s. So no, dude, it's not 1930s. But yeah, they did use them in the 1930s. We also use them in the 70s, 80s, and 90s. All right, so here's Yield Max. Okay, first thing I want to show you is this right here. Now, some of you are going to be excited by this, and some of you are going to be scratching your head. How the hell do they do that? All right, so AJ, take a look at this and tell me what you think. The yield. Now, do you understand what the yield is? The yield is the rate of return. Now, how they say, well, you put a couple $100 into a CD and 60 days or 90 days, you get a 3 to 5% return, whatever. Well, Yield Max is giving a 140% return. Did anybody get that? Anyone besides me? How can a company, think about this. You may be excited about that number, 140%. Okay? If you think 50% is hard to get, well, at least I have a verifiable way of getting 50%. But how, explain to me, AJ, how can a company pay out more money than they're bringing in? Explain it. Because a dividend, a yield, is a profit from their investments. So if you're making a certain amount, so let's say you make $100 million. Okay? 140% means you make 100 million and you have to pay out 140 million. How can you possibly pay out more money than you're making? It makes no sense whatsoever. Think about it. Okay? Yield, not the rate of return. Well, I'm kind of thinking it is. Okay? Okay, you ready? Stock yield, specifically dividend yield, is calculated by dividing the annual dividend paid per share by the current stock price per share. For example, if the stock pays a 2% share, the rate would be 0.04. Okay, basically what the rate of return is. Basically what it says. Okay, so your yield is basically what the dividend is divided by the stock price. Again, how does a company pay out 140%? No possible way. Yeah, that's 101 stuff. Exactly. But why would you invest in a company? Anyway, let's go back to it, right, to get out of that. All right, so let's go take a look at the historical data. Now, when I say historical data, right over here, okay, the historical data, specifically, right here, historical data, what I want to see are the dividends only. Okay? So this thing, I want to see every single dividend this company has paid out since it started. Okay, see, I have a minor problem with this. The very first dividend this company paid out is in April 2024. Well, that was what, 13, 14 months ago? That's not 2 decades. That's not consistency whatsoever. So let's take a look at the numbers. The very first dividend is $4, $4.12. The second dividend is about a 45% reduction. So it goes from $4 to $2.50. That's about a 45% decrease. The next one is $3, which is up a little bit. Then it drops back down to $2.30. Then it drops to $1.94. Then it drops to $1.85. Then it jumps back up to $4.40. $3, then drops to $2. Was that a 30% drop? And then a 10% drop. And then a, what is that? From 2 to 70, 30, 30% drop. And then it's like the numbers just don't add up. Okay? How can you claim to be an expert if you don't know what the rate of return is? Hey, cool beans. Nope. Stock price changes. Absolutely it does. Is this your second account? Yes, it is. Okay, so M. Falrick. Okay. If I don't know what a rate of return is. Now that's interesting. I always thought a rate of return is if I put in $100 and I get $10 back, that's a 10% rate of return, or also known as a 10% yield. Same thing. Okay? Now I understand the stock prices go up and down and yields change daily, but still, how can a company pay out 140%? That's more money than they're earning. It just, the numbers just don't make sense. All right, so let's get out of that. Go back to here. And Walgreens, we don't like Walgreens. The numbers just don't look good anymore. John, Chevron. How are we feeling about Chevron? CVX. Interesting. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Up, down, up, down, up, down. Now it's going sideways. We're at 136. Hold on. I got to do this. Right there. Okay. It's at 136.90 at the moment. So if I'm buying it at 136.90, the closest strike price is going to be the 137s. And look at the numbers here. The 137 is going for 197. The 138 is going for 148. The 139 is going for 107. So having a nice return if you're okay with covered calls. It's a simple strategy. All right, so what do we have over here? Hello, do you trade the futures market? No, I don't. I just do dividend investing. That's it. Moo Cow, good evening. Oh. Setar Decker, do you consider periodic data like a share rises 5 to 7% on April every year? Yes, we call that seasonality. Sorry, which stock was that? Chevron, CVX. Lady Foss, how are you today? Nice to see you, Lady Foss. Jake, how do you find the trade 10-minute within the day? How do you find the trade 10 minutes? I do it all. Okay, see, nowadays I'm retired, so I can sit in front of the computer when the market opens at 9:30. Okay? But before then, I would do all my trades before I went to work. Nice to see you too. Thank you, Lady Foss. Luke. Oh, Paul. I have my pen now. Kindly run through your method one last time. Uh-oh. Okay, Paul, you ready? I'm going to take a deep breath for this one. All right, Paul, basically this trading strategy is called dividend capturing 2.0. I look at pre-qualified dividend stocks, and those are companies that have consistently increased their dividends for more than 2 consecutive years. That's 20 years. And weekly options. That's the only criteria, consistency of profitability and weekly options. Once you figure out that, then you go into a dividend calendar, find out when they're going to actually pay their dividend. Because just before the dividend payment, the stock has a tendency to go up in value. The stock has a tendency to go up in value. What do you do with that information? The information, I use it for a covered call. It's a simple, safe, predictable, consistent strategy. It's one of the safest strategies there is. You can even do a covered call in a IRA, which you can't do in most of the other ones. So the thing is, never buy a stock you don't understand. That's number one. Number two, never sell a loss. Number three, consistency of profitability. Number four, weekly options only. Number five, make sure the numbers work. I hope that all worked out here. Okay? That was quick. All right. What is the crux? That's the crux for me. You got to explain that a little bit better. Okay, Walgreens private takeover price is $11.45. Yeah, okay, I get it. But ever since the private takeover of Walgreens, trading it with a covered call just doesn't work anymore. It's just not profitable anymore. Okay, TTD, please. What the heck is TTD? Let me finish up with Chevron first, and then we'll do TTD next. So let's find this out. So Chevron, we want to see, is it the right time to buy Chevron? Because Chevron is one of those companies that is on my list. Oh, hi. Okay, I'm not quite sure. Jacob, are you saying oh, hi? Or is that a stock symbol? So user 4848832, Chewy. Chewy hasn't been around for 2 decades yet. Chewy's an automatic no. It's got to have profits for at least 2 decades. Now there's over 10,000 different companies. Chewy has not been around long enough. PD, yeah, they do. They return capital. That's the only way you can pay more than you actually bring in is by actually taking cash from the kitty to pay out. Yeah, you're right, it does. So Silas wants to do Procter & Gamble. Hold on, Silas. We're still doing Chevron. Okay? It's a stock. It's a REIT. Okay, so Jacob, hold tight. We get somebody over here in the live actually making a little bit of noise in the background. Who is it? Oh, all right, they muted it. I was going to see who it was. All right, so we're looking at Chevron. Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. So we're down here now. So let's find out what's going on. Is it the right time to buy Chevron? Here's the low of the year back in April 11th. There's the bottom of the year. Okay, she shot up, pulled back. Now she's going back up again, but nope. We have 2 down days in a row, today and yesterday. We got a bottom here. Let's zoom into the 30-day. 30 days right about there. Okay, this is your 30-day chart. Now, I like the 30-day chart because it gives me an idea of where the stock is going next. Here's where it was 30 days ago, 135. It shot up to 144. Okay, now from 135 to 144 is an $11 move. $11 on a $135 stock. Well, that's 8%, 9%. 135 to 144, 11 bucks. It's not 10%, it's less than 10%. So it's probably like 8 or 9%. So it went up 8 or 9%. Now it dropped down here, 134, shot up from 134 to almost 141, and then we have 2 days pulling it back. So Chevron, not quite time to jump into Chevron, but we will keep an eye on it for another week or two, because once she comes back down again, she'll regroup and turn around in about a week or two. So we'll write Chevron down for a week or two. CVX. All right, so what was next? Who wanted to look at something? All right. I can't read that. Okay, but TTD. What the heck is TTD? TTD. The trade desk, hell no. I don't think the trade desk has 20 years of dividends. So we're going to Yahoo Finance, because Yahoo Finance tells me right away. Here we go. Okay. TTD. There are no dividends in this selected time period. Now, it may be a great stock, but without being able to see when it moves, how else am I supposed to figure it out? Now, if you're looking at a dividend stock, okay, and the dividend shows you what date, okay, because it's dated, because they pay a dividend every 90 days. So we can see, and then we can judge by historical performance in direct relation to the dividend. Does it go up just before the dividend date? Well, without the dividends, how do we know when it moves consistently? So without a dividend, I have a hard time being able to judge when is the right time to buy it. And then, what's the worst case scenario? Well, the worst case scenario with a dividend stock, specifically one that increases dividends every year, worst case scenario is you're stuck with a company that consistently gives you more money every year. Oh, boo-hoo. Think about it. Okay? No dividends. If the stock goes down, I'm not getting anything. I'm not getting any rate of return. But a dividend stock, if the stock drops, well, at least I'm getting a higher dividend every year. Because think about it. If a company has increased its dividends for 5 decades, that's 50 years. Now, there's a company called GPC, Genuine Parts Corporation. 7 decades. That's 70 years of increased dividends. So if their stock drops, well, they're going to give you a higher dividend next year, because they get 70 years of increased dividend payments to the shareholders. So why would I buy a company that doesn't have dividends? Because they're not sharing their profits. If you had 100 CVX stocks at 135, what premium would you sell a covered call? Well, 135s. If I bought it at 135, I'm going to sell it to someone else at 135. So let's go back and I'll show you why. CVX. Okay, it's at 136 now. The 135s, okay? If I bought it at 135, the 135 for next week is going for $3.10. Well, $3.10 is about 2.5%. Now, CVX has the ability to do a weekly option every single week. So if you're at 135, okay, you could sell the 135s, pick up 310. If you don't want to do the 135s, you can do the 137s and pick up 197. That's $2 per share. Okay, so 100 shares at the 135, it's 310. That's $310 per contract. Profit. Over and above, because you get the money back. So if you buy it at 135 and you sell it at 135, you get all your money back. Plus, you get $3.10 a share. For one contract, that's $310. for one contract. You do 2 contracts, it's 620. 3 contracts, 930. Okay, so it all depends on what you want to do. Me specifically, I want weekly cash flow. Damien, XRP is not a dividend stock that is 20 years old. So terribly sorry. No to XRP. So that's Chevron. What do we have next? APP. What the heck is APP? AppLovin. Are you kidding me? 414. APP. Well, how well does AppLovin do with their dividends? Oh, imagine that. There are no dividends in the selected time period. So I ask for 2 things and only 2 things. 1, consistency of profitability, which means 2 decades of increased profits or increased dividends, however you want to look at it. And number 2, weekly options. Okay, AppLovin, no. Lady Foss, what happens if the stock meets strike pricing, it's called? Now, are you saying, Lady Foss, you buy a stock, you sell it for someone else, you can make a profit, and you're unhappy about that? Some people are. It's weird. Okay, so if, all right, hold on. Let's go back to here. I don't want to even look at that thing. Okay. Okay, so here we go, Lady Foss. If I'm buying AT&T at $27.76, if I sell somebody the $27.50, pick up 54 cents per share, okay? Stock goes up a little bit, and then they take the stock away from me. Well, I made a profit here, and I made a profit here. What's the problem? Just move on to the next company, or wait for that stock to come back down and jump into it again. Yeah, baby's in the house. Bob. What's happening, Bob? And pluck it. You got it? Cool beans. Jacob wants to look at OHI. Now, Jacob, I've never heard of OHI. And let me just give you a quick, not really a warning, but I'm looking for companies that have consistency of profitability, which is 2 decades of increased profits, and weekly options. Do you really think OHI meets that? I've never heard of it. OHI? Hell no. Now, Jacob, when I say monthly options don't work, why do you have me looking at a stock that has monthly options? 20 June, 18 July, 19 September, 19 December. That is a monthly optionable stock, which means I can only trade it once a month. I want weekly cash flow, not monthly. Monthly just doesn't work for me. Okay? Consistency of profitability, weekly options only. Now, I got 5 rules. They're simple rules. Rule number 1, never buy something you don't understand. Okay, so for me to take a look at OHI and for it to have monthly options means you're looking at something you don't understand. Why are you looking at something you don't understand? It doesn't make sense. Never buy something you don't understand. And if you understand it, you would know it has monthly options, and monthly options just don't work for this strategy. Zim doesn't work for this strategy either. Roblox, Fender, what the heck is Roblox? ROBLOX. We cannot find that symbol. Oh, okay. ROBLOX. We cannot find that symbol. So it's either not a U.S. stock or it's some kind of acronym for something that I have no idea what it is. I admit, I have no idea what ROBLOX means. Sorry. Enrique, Zim.
It's RBLX.
RBLX. What the heck is that? RBLX. Hell no. Think about this. That's the time for selling, not the time for buying. So, no. Okay? Look at that. Shoots up like a rocket. That's a no for me. I'm not looking for that. That's not what I'm looking for. Granted, it looks nice, but look how long you had to hold on to it. And then when do you sell it? So we're looking at, was that the 10th of April? And then it goes all the way to the 2nd of June. So where do you sell? Where do you jump off this roller coaster? If you keep holding on to it, how are you going to pay? How am I going to pay my bills? My bills come due every month. If I'm holding it for 2 or 3, 4 months, well, where's my cash flow? I'm not looking for capital appreciation. This is a capital appreciation type of stock. Not what I'm looking for. Thank you, Texas. Thank you, Eggy Thomas. What's happening? Uh-oh, David wants to take a look at Alcoa. David, that's an awesome company, Alcoa. We had some Alcoa a while ago, made a nice profit off of it. What's it doing now? Well, let's take a look. The high, the low, where was it? Where is it? Look at the motion. Down, up, down, up. We're at 27.99. The 28 is going for 82. That's over 2%. Now, do you realize that 2% every single week is over 100% per year? That's nice. What do we have here? Cliff, Apple 10, weekly covered calls, expiration Friday, 200 strike, today profit, but it's 201. Why? Okay, Cliff, I want you to hold that thought for a second. I'm going to get to that. See what else we have here. We're still looking at Alcoa. Let me finish up with Alcoa first, and then we'll take on to that question. Hold up. A year ago, Alcoa was at 42. The high of the year, the end of November, was at 47, 44. The bottom is right here, the 9th of April. So from the 9th of April, she shoots up, pulls back, and now we have 1, 2, 3 days to the upside for Alcoa. Now, I love 3 days to the upside, especially when it downturns. You get a high here, down there. Okay, let's zoom in a little closer to the last 30 days. Here's our last 30 days. 30-day high, a 30-day low, down, up, clear to see, clear as day. Look at the space. From this bottom here to here, that's a lot more space. So what does Alcoa normally do this time of year? For that, we look at the seasonality chart. There you go. Well, this doesn't look very good. Okay, how does that look? Okay, how does that look? That don't look that good. Okay, gonna go up a little bit, then she's gonna drop, and then she's gonna go sideways. Now, that's just historical performance. That doesn't mean that's what it's going to continually do. That's just what it's done over the last 10 years. Could it do the same? Could be. Lady Foss, do you sell covered calls on Friday or Monday? Monday. I buy the stock on Monday, sell the covered call on Monday with the hopes of it being expiring on Friday. That's normal. So even though I like Alcoa, it doesn't really look that pretty today. Is what it is. Here's the bottom, here's the top, come down, now she's going up. Now this here is called the trend. It's trending to the upside. So trends always supersede historical performance. CRWV. Todd, how are you today? Yep. Holy sheet, man. Yes, it is a game. How do you get the number you have on the right side of the chart? Daniel, how are you doing? I gotta go back. What's the best stock you have? It'll be U.S. Steel this year. Uh-oh. I gotta go back and see some of these questions. I missed some of them. Okay, Michael said, possible if they didn't pay dividends equally profit previously. Okay. They returned capital. Yep, that's true too. Silas, Procter & Gamble, we'll take a look at that in a minute. Okay, Felix, where can I buy a Rolodex? Better than a PC. I won't get hacked. That's 100% certain. You know, the very first thing they do when they raid an office, okay, you ever heard the raids where the IRS or the FBI come in? Very first thing they do is they take the Rolodex. All right, hold on. All right, we're going to do that in a second. Hold tight. That's Alcoa. Let's take a look at Alcoa. Oh, I already did that. So the 28s. Now let's find another one. So right around 11:15, no, right around 11, we're going to go over the 5 stocks that we picked on Monday. We're going to go over those, and then we're going to answer questions. So hold your questions for a little bit. What do we have here? Cliff. Cliff, I'm not 100% sure what you mean. Okay, so Cliff, I'm not 100% sure of this because APPL 10, weekly covered calls, APPL 10 doesn't come up as anything. Now, is it Apple? That's AAPL, AAPL. All right, AAPL, there you go. Here's the high, here's the low, here's where it was, here's what it, look at this. Up, sideways, up, down, up. 201. The 200 is going for 420. So I'm not quite sure what the question is. So Cliff, without looking at the trade specifically, I don't know what you're talking about because I don't know what you bought Apple at. Okay? Apple 10 covered calls, expiration in Friday, 200 strike, today profit about its 201. Why? Cliff, there's a lot of missing information there for me to be able to answer that question. But if we're looking at Apple right now, the stock's at 263, not 263, but $200.63. The 201, well, the 200 is going for 420. That's a nice strike price. But this week's 200 is going for 170. So I'm not quite sure what your question is, Cliff. Because it looks like a half a statement and half a question. It's like a statement with a question mark to it. I don't know. Anyway. Okay, Super Cuban APP. All right, here we are. Silas wanted to look at Procter & Gamble. So let's take a look at Procter & Gamble, another dividend king, over 100 years old. No. Terribly sorry. Look at the last 30 days. Here's your bottom. She shot up. There's your top. Now she's coming back down. So I'm thinking Procter & Gamble, maybe 2 weeks. Let's write Procter & Gamble down for 2 weeks from today. It's already written down. Imagine that. Already written. Felix, you can buy a Rolodex on eBay. Okay. There's no name there, so I really can't read it. But he wants to take a look at APP. What the heck is APP? Apple. We already looked at Apple Oven. That's a no. No dividends. No, thank you. Super Cuban wants to take a look at UPS. UPS. Interesting. Here's our high. Here's our low. Here's where it was. Here's where it is. Look at the motion. Up, down, sideways, 96.87, which is the current price. So we'll be looking at the 97s, and the 97s for this week, got 1 day left. What's the big deal? The 97, 149 for next week. Well, 149 is 1.5%. 1.5% every single week is over 75% a year. Well, I like 75% a year if you can do it every single week. That's always a tough one. Damien, XRP. Okay. XRP, we can't find this symbol. So it's not an actual stock, it's an ETF. Volatile shares TR2X XRP ETF. Yeah, I don't do ETFs. Sorry. What do we have now? Supro Cuban. Came in late, they pay healthy dividends. Okay, not looking for that. Fender, we already looked at RBLX, it's a no. Enrique, Zim, no dividends. Super Cuban, are you a UPS fan? It meets the criteria. Absolutely, I love UPS. Whoops. Here we go, UPS. We just did this one. High, low, all that kind of nice stuff. It's at 97. The 97 is going for 149. Well, let's zoom in and see if it looks good. A year ago, UPS is at 137. The high of the year was 148, and that was back at the end of July. Well, from there, look at where our bottom is. Right there on the 9th of April. So the 9th of April, the bottom at 91, shoots up to 103, pulls back. Now she's going up slightly, but what happened today? Let's zoom into that. What happened today? Okay, here's our new bottom right there. Here's the high. Okay, 30-day high, 30-day bottom. Now she's going up, but from 95 to 99, today she pulled back. Why? Why? I don't know. But do you like UPS? That's a good question. Number one, never buy something you don't like or you don't want to hold on to. Okay, Marco de la Fuente. Whirlpool is a monthly. That's going to be a no. Sorry, Marco. Cade, how can I make $25,000 as quick as possible? You're in the wrong place for that one, dude. Sorry, Cade. Enrique, can you do Zim? Okay, Enrique, I just said Zim has no dividends. That's going to be a no. Okay, Be Wealthy. What's the best stock I have at the moment? It would be US Steel. How do you get the number you have on the right side of the charts, please? Okay. First and foremost, if you're on Thinkorswim, the top says monitor. The very next one says trade. Okay? That's what you see right there when you click on it. All these little lines here represent some information that you may or may not find interesting. Now, I've been using Thinkorswim for about 20 years, and I have no problem whatsoever telling you that I know absolutely nothing about 97% of everything that's on Thinkorswim, because there's so much information there. Most of it has got nothing to do with me. I concentrate on specifically what I want, and I don't pay attention to everything else. So 97% of everything here, I'm totally clueless on, because it doesn't mean anything to me. I have a goal. My goal is 1% a week. Simple, safe, predictable, consistent. I don't hide what I'm doing. So if it has nothing to do directly with what I'm doing, why would I want to clutter my head with that stuff? So to find the numbers, first, you come up to trade. Then you do underlying. Underlying, just the stock information. You click on that, and that gives you the information for the stock. Okay, the last trade, the change, the bid, the ask, the volume, the open, the high, the low. It's all the information on the stock you need. Now, you can't get the information on the options. See, it says option chain, third one down. That's the information on the options. You can't get that without being approved for options. You have to actually fill out the paperwork for that. Okay, Lady Foss, that's right. Okay, Cliff, I sold 200 strike and it's 201. I'm in the money. Yes, you are. What's the problem? What did you buy it for? Okay, so you're missing a couple of things in the equation. When did you buy it? What did you pay for it? Did you sell a covered call? If so, you said you sold the 200s. Well, the stock's at 201. So you're in the money. So more than likely, someone is going to take those shares away from you at 200. Are you okay with that? If you're not okay with it, then you might have to roll it forward, which means buying back the option that you sold and selling another option further out in the distant future. Next week, the week after, whichever one you want. It's always different. Okay. What if a fundamentally good company has cut in market capitalization? Should I sell that shares? There's going to be a lot more to it than that. Satiriker. I'm having a difficult time pronouncing that name. Yay, win. Good evening. Thank you. UNP. David Hume wants to take a look at UNP. What the heck is UNP? UNP. Oh, Union Pacific. Gotta love Union Pacific. But unfortunately, take a look at this. 30-day bottom 30 days ago. 30-day high 4 weeks ago. And look what happened. Down, 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 down. So Union Pacific is going to be great when it finds the bottom, turns around, goes back up. But you got to wait and look for the bottom. Union Pacific. I don't know who came up with that one. David did. Thanks, David. On Setaradaka. On what capital you get 1% profit? Someone always asks this question once a week. Once a week. All right, so you ready for this one? Hold that thought. So we're going to go here. We're going to look at the weekly trades for 2025. You ready? Here we go. Account number 1, account number 2, account number 3. So if you look closely, the beginning of the year, January 1st, account number 1 had 151. Account number 2 had 143. Account number 3 had 114. Okay? So if you look a little deeper, you will see week 22. I haven't done week 22 yet. That was last week. Week 21, which was May 19th to the 23rd. May 12th to the 16th, week 20. Week 19, May 5th to May 9th. Week 18, April 28th to May 2nd. So this is all year. Now I have 7 accounts. 7. I share 3 of them publicly. So you see every single one of the trades that I do. I don't hide anything except for the 4 accounts that you guys ain't going to see. I get 7. I share 3 of them. I think that's plenty. Advanced Auto Parts, Macy's, U.S. Steel, Macy's, Delta Airlines, Alcoa. That was for this week. So those are the trades. I show every single one. Over here is the timestamp. The date, the time, what kind of a trade it was, buy, sell, the quantity, the symbol, the expiration dates, because that's all I do is covered calls, the call options, and the profits are right over there. All right, so let's go back to, here we go. All right, next. All right, Todd wants to take a look at CRM, all right, hold on, Lee, Kids Game. All right, thank you, Lee. Okay, Egg Thomas got that one. CRWV. Todd, I have no idea what that is. CRWV. Core Weave Incorporated. Interesting. Okay, it's got weekly options. All right. Let's see how they do on their dividends. CRWV. Okay. All right, here we go. Core Weave Incorporated. CRWV. That's just the information right there. This is on Yahoo Finance. We get all kinds of lovely information. So we're looking at dividends only, and oh, imagine that. Why isn't it on my list? There are no dividends in the selected time period. Okay, so I asked for something simple. Consistency of profitability, which means 20 years of increased dividends, which this doesn't have, and weekly options. So Todd, CRWV does not fit. Sup? What's going on? Ryan, BUD, WV just had their IPO. He wants companies with 20 years. Thank you, Ryan. Corey, good evening. Shock Trader, TRMD. What the heck is that? Anytime I ever say, what the heck is that? It's usually going to be a no. TRMD. Hell no. Shark Trader, you weren't paying attention. Should I buy Tesla stocks? Try it. I can't tell you what to do. I don't know why you'd buy Tesla stocks. What do you use a seasonality chart for? Uh-oh. Uh-oh, Ryan. Oh, good. Thanks for asking. All right, Todd. Ryan, why do I use seasonality? Oh, my goodness. Oh, my. All right. Who asked that one? Ryan. Ryan, this here is what's called a seasonality chart. All the way over to the left is January 1st. All the way over to the right is December 31st. It's basically the whole year. But the blue line represents the movement for this year, 2025. The red line is a combination of the last 10 years data. The open, the high, the low, the close, all that kind of nice, neat, fun stuff for the last 10 years. 2015, 2016, 17, 18, 10 years of data all on top of one another to show us how does the stock move predictably based on the seasons, winter, spring, summer, fall. So if you take a look at this here, you got a nice strong movement in the beginning of February for the whole month of February. Great. It gives me a good idea. Well, if I want to buy this stock, I want to buy it at the end of January, beginning of February, and it shoots up. So for the rest of the year, it goes sideways, no big moves. But look right here. In the middle of July to the end of August, another nice move. This is called predictability. If it does the same thing year after year after year, why wouldn't you use seasonality? Because if you think about it, if the company does the same things, like Coca-Cola, they make Coca-Cola. What do you think they're going to make tomorrow? Coca-Cola. What do you think they're going to make in 20 years from now? Coca-Cola. What did they make 30 years ago? Coca-Cola. They make the same thing day after day after day. So the stocks, basically, they're not introducing new products. So how are they making their money? Well, they make their money based on seasonality. So there's a big push in February. Why? Because the stores are getting geared up for the summer. And at the end of the summer, they're replenishing. So right there. I don't know. I mean, it makes sense. If a company consistently goes up beginning of February every single year, for the whole month of February, nothing but up. Let's zoom into it. Okay, so from the end of January to the end of February, nice upward trend. Well, what did the stock do this year? Well, end of January, the first 2 weeks of February, she went up. Well, that's nice. So knowing when a stock is going to move and how to use the charts that are available for you, well, it gives you a good idea on what to do next. All right, so it's about 11 o'clock. Let's get out of here. And we want to take a look at the 5 companies that we picked out at the beginning of the week. All right, hold on. I'm going to answer some of these questions in a minute. Let's go over the 5 stocks that we looked at the beginning of the week. So at the beginning of every week, next week we're actually going to put it into one of the paper trading accounts so you can actually see it. Well, here I just wrote it down to get an idea of what's going on. So the first one we looked at was Ford. Now that was for Monday. So let's go back and take a look at what happened on Monday. Okay, here's the high. Okay, Monday, we're right about here. Okay, we opened up at 10:30. Okay, now at 10:30, we would have gotten, so we checked out the numbers, and it was 2.48. As long as the stock stays above, where was it? Right there, 1050. Okay, so as long as the stock stays above 1050 on Ford, we would have made money. Or it looks like we have to roll it forward because it dropped down to 1010. So the 1050 is actually worth 2 cents now. So if we roll it forward, we're going to get 0.5%. It didn't work out as great as we wanted it to, but it's Ford. It's been around for over 100 years. I got no problem holding on to Ford. All right, the next one was Apple. Now, Monday, Apple opened up at 200. This is the same thing we were saying over here. You sold 200 strike, it's 201. I'm in the money. Yeah, I got that. Lady Foss wants to take a look at Cisco. Lady Foss, we'll see what I can do. Can't promise anything now. We're going over the 5 stocks we picked on Monday. So we picked Apple at 200, right here. Well, now it's at 201. So we made money on Apple as long as she stays over 200 by the end of business tomorrow. Well, it looks like it might. So that's a winner. Next was United Airlines. United Airlines. Same thing. We bought United Airlines on Monday. Well, here we go. Monday it was at 78.93, so most likely would have done the 79s. Well, it's at 80 now. The 79s are worth 199. So yeah, that's the second one, and that's a winner too. So Ford is the only one that's teetering, but we got 2 out of 3. Hold on, we got 2 more to go. CVS, we did that one also. Monday, CVS opened up at 63.50. So at 63.50, we would have done the 63s or the 64s. Well, right now, it's at 63. So the 63s, we would have been in the money. The 64s, not so much. But we still have tomorrow. If it's above 63 tomorrow, then it will be a winner. If it's above 64, it's even better. But we don't know. We'll wait till tomorrow. Last is going to be Humana, H-U-M, Humana. Okay, so Monday she opened up at 232. So we've been doing the 233s. The 233s, is that right? Yeah, 232, 233. So she's actually pulled back a little bit. So no. So you got 2 winners and 3 possibles. So the 3 possibles would end up rolling in next week depending on what it ends up tomorrow. So those are the 5 that we picked. We're running about a 50%. Okay, fine. All right. Lena, good evening, Lena. Moo Cow, good evening, James. Sorry, I deleted my question as had already answered. Will you consider a company which, instead of distribution of dividends, invest profits in the company itself? Nope. That's capital appreciation. So I'm looking for cash flow. There's 2 different types of companies. There's cash flow companies and capital appreciation companies. If you're looking for capital appreciation, more than likely you're in the wrong place. I don't do capital appreciation. I'm retired. I don't want to sit and watch a stock go up or down, either way, and wait to take my profits. I need my profits now because that's how I live. My income comes from 1% on the returns that I get from my trading. That's it. I don't get Social Security. I had my own business. I don't have a pension. So any money that I have coming in has to come from me. And I'm just sharing with you guys. Now, I'm sharing with you for a reason. Okay, I'm making a video dialogue or a video diary for my children and my grandchildren. Now, granted, my grandson's only 5 years old, and that's all I have at the moment. I'm kind of hoping my other son and my other two daughters will do something eventually. But the video logs that I'm creating here is going to be set for them. So you guys just get the privilege of seeing what I'm doing. Okay, some old Dutchman. Not trying to be annoying, but I like that one. Not trying to be annoying, but would you be able to get rid of a volume data at the bottom of the chart? Oh, you know what? I've never ever asked anyone. No one's ever asked me that question before, but okay. Haphazard. I come from a large Italian family, and there are a lot of us. Okay, random, but do you know any of the Palatas from Situate, Mass? Palata. No. Sorry. Some old Dutchman. No, I don't know how to do that, Mr. Old Dutchman. Apple's done. They missed the boat on AI. They lost blocking texting and USB-C. Up, down. Nice technical analysis. Did you like that technical analysis? Look at this. Down, up, down. Hey, that's all stocks do. You want more technical analysis than that? Well, try to explain that to a 9-year-old. Now, a 9-year-old gets it. Here's the high, here's the low. Well, what happens on a high? Well, it usually drops. What happens when it's at the low? It usually goes up. Well, lo and behold, it's exactly what it did. It went down, and then it went back up again. That's all they do. Stocks go up, stocks go down. They don't do anything else. The momentum and the amount of movement, well, that's important. Okay, how far can a stock go up before people will say, wait a minute, I'm going to take my profits before they disappear? Because stocks go down, and then they go up, and then they go down, and then they go. That's all they do. If you're expecting a stock to come to your house and take the dog for a walk, sad mistake, it ain't going to happen. Okay, stocks go up, stocks go down. So 71, 718, I'm glad you find that amusing. But that's basically what they do. They go up, they go down. That's it. Okay, Luke, Chevron looks good to you. Uh-oh. Do you consider FII or DII data while buying stock? Absolutely not. I'm a numbers guy. Does it make sense? Where is the stock most likely to go next? Okay, you got a 30-day high. Most likely there's going to be profit taking. People take their profits, great. Stocks drop. Stocks drop to a certain reason, to a certain level. People start saying, oh, Humana at this price, let me buy some. And then the stocks go up. And they'll go up to a certain place, and then people say, wait a second, I'm going to take my profits. And then it comes back down again. It's a vicious routine that goes on and on and on. It's kind of like that. This is the song that never ends. It goes on and on, my friend. Yeah. It's one of those things that just keeps going on and on and on and on. If you take a look at Humana, you will see the stock goes up, down for the last 10, 20, 30 years. That's all it does. It goes up, it goes down. It goes up, it goes down. That's it. That's it. That's all. All right, next. Real rugged do-it-yourself dude wants to take a look at Intel. Okay, we'll go take a look at Intel as soon as we look at Exxon Mobil. XOM. Interesting? No. Sorry, wasn't that quick? Now, I always tell people it should take you 3 to 4 seconds to look at a chart. Initially, your first glance, 3 to 4 seconds. Okay, 3 to 4 seconds. high, low. Where was it? Where is it? Look at the motion. Up, down, up, down, up, down. What's going on here? It's coming down. Let's zoom in a little bit closer just to verify. See? It's coming down. No. No to ExxonMobil. It's actually that simple.
So I have to ask you what DK.
Oh, who's over here?
I'm sorry.
Oh, that wasn't for me. That was for someone else.
No, I'm sorry. Hey there. Hey, James. It's just Mike Robinson. I'm sorry there.
Hey.
I was having a stock argument with ChatGPT while I'm sitting in the hangar.
You're in the hangar. Are you at home?
Yeah, I'm actually home. I'm out in the hangar working on airplane stuff right now, listening to you on the Bluetooth.
So where did you?
Voice.
All right, where did you come from?
It's my last flight, Mexico City.
Mexico City, dude. I gotta jump on a ride with you one of these days. I love to go. I love it, but the funny thing is, I want to go for the ride, but I want to stay for a couple of days. I don't want to just fly someplace and fly back. Let's go to Texas for some coffee and come home.
Yeah, we could do that. I could take you somewhere and leave you there.
Thanks. I'm gonna remember that. I'm gonna remember you.
You can ride back on your own.
Yeah, I'm gonna remember you on my Christmas card list, dude. All right, what are we looking at now? Okay, CrowdStrike or Pan W? No. Paul wants to take a look at Dow. Ooh, I like Dow. D-O-W. Wait a second, we're supposed to be looking at something else. Intel. Okay, real rugged dude. We're going to take a look at it in a second. Here's Dow right here. Here's our high, 57.50. Here's our bottom at 25. That is a more than a 50% drop for those of you who own Dow. Now, if you're thinking of getting into the stock market and investing, if you are not ready for a 50% drop in anything that you buy, you probably shouldn't be playing this game, because that is a high possibility. Because that's all stocks do. They go down and they go up. Where you jump on the roller coaster, who knows? Who knows if that's the high or the low? Because that's all it does, go up and go down. So here, we see where the high is a year ago. We see where the bottom is a couple of months ago. Well, now we're at 28.18. It's clear to see this thing dropped, bounced up, dropped again. Now it's going up again. So exactly what do we think it's going to do next? How much is your course? Marvelous, I don't even have a course. See, people ask, what am I selling? I'm not selling anything. Now, do I have stuff to sell? Yeah, I got shit to sell. It's in the bio. You guys are old enough to know that, yeah, if I'm here, I do have shit to sell. But I'm not trying to sell you anything. I'm just informing you. That's it. I don't think you heard me once say anything about, hey, buy my shit. No, you won't hear that from me. I'm here teaching and sharing knowledge. If you want to join, hey, join. Okay? All right, anyway. Dow, chemical, drop, back up, back down, back up. Let's zoom into that, see exactly what the heck going on here. Here's the bottom right here on the 9th. How many companies bottomed out on the 9th? Did you notice? Did anybody besides myself notice that a lot of companies had a bottom on the 9th of April? Anyway, here's the bottom, shot up, pulled back, 3 days to the upside. Okay, here's the bottom right there. 1, 2, 3. 3 days to the upside. Is it bouncing? Don't know. We'll look at the numbers. 25 to 32. Well, 25 to 32 was that 17? No, like 25 to 32. 7 bucks. So a $7 increase on a $25 stock. Think about it. That's 25%. That is a 25% increase. And what's the time frame? Well, the time frame was the 9th to the 12th. That's a little over a month. Okay, so Dow went from the bottom of 25, jumped up over 25% in 30 days. Well, yeah, there's going to be profit taken, 25% profit taken. There you go. Here's the new bottom right there. Now she's going back up again. does it make sense to buy it? So let's look at the last 30 days. Okay, here's the last 30 days. Now, explain to me, if you don't think that that is logical, up, down, up, if you don't think that's logical, then explain to me what you think it is. Here's your 30-day high. You cannot argue with that. There's only one 30-day high. There it is. There's only one 30-day bottom. There it is. That was on Tuesday. Okay, 30-day bottom was Tuesday. Wednesday was higher. Today was higher. Is tomorrow going to be even higher? We don't know, but it looks good. Okay? Just because it looks good doesn't mean it's going. You know what we haven't done yet? We haven't done a single covered call today. So let's do one on Dow at 28. Let's do the 28.50. Because right now it's at 28.18. So 28.50. So we got a choice, 28 or 28.50. So let's look at both of them. Which one would be better? Now I'm letting you know, me personally, I do the 28 because it's a safer trade. 28.50 is more profitable, but as you can see, it's at 28.18, which means the stock's got to go up. Has to go up in order to be profitable. Anyway, let's check it out. Let's get rid of this. Let's change this to a covered stock because I like the covered call. I'm not going to do tomorrow's. Not enough time there. And I'm going to look at the 28s right here. Okay, one contract at 28. The market, there we go. Here's what it sounds like. Now, I always tell people, read it out loud so that it makes sense and you understand what it is you're doing. All right. Let's keep doing this. By one covered call, Dow 100, that's the weeklies, 13 June 25. Well, 13 June 25 is next Friday. The option here expires, comes worthless next Friday. So, the $28 call option against the Dow stock at the market to open to open. Now it says to open for a reason because we're doing two trades in one order. Okay, we're buying the stock and we're selling the option. Now the stock, once I buy it, I own it, I can do whatever I want. It never expires, never, until I decide to sell it. Now the option, 13 June 25, that will expire 3:59 p.m. next Friday. So whoever buys it from me has between when they buy it and 3:59 p.m. Friday afternoon. Not tomorrow, but next Friday. Okay, so this is how much I'm bringing in per contract, $68.50 per contract. What's the contract costing me? $2,700. So I'm taking a look at this from a different point of view. Okay, now a lot of people have a hard time understanding stocks and options, and let's see if we can change that a little bit. So hypothetically speaking, we all know how rental real estate works, right? You buy a house and you get a monthly income from that property. Well, let's take a look and flip this around. Let's say, hypothetically speaking, we are buying a piece of property on 281 Dow Street, and we're paying $100,000 for it. $100,000 for 281 Dow Street. All right, great. What am I bringing in? Well, I'm bringing in $685 every month. However, this is weekly. I'm bringing $685 a week. So if I buy a house, I get a rate of return from a rental. So what if we did the stocks almost the exact same way? Say the house on 281 Dow Street cost me $100,000, right? And it's bringing me in $685 every single week. Well, that's a nice little investment, isn't it? Well, what's the difference between a stock and a real estate? Well, they both fluctuate in price. If you take a look at a price of a house, okay, this month it's selling for this amount. Next month it might be higher, it might be lower. A year from now it might be higher, it might be lower. But you know what usually stays the same? The rate of return, or how much money you're renting that house out for. Well, think of a stock as the same way. So I have 100 grand. Am I going to buy a house for 100 grand, or am I going to buy $100,000 worth of stock? So the stock, 281 Dow Street, is paying me 685 every single week. But the thing is, the stock has a tendency to go up and down in value. Well, so does the house. The houses go up and down in value also. But there's a difference between stocks and houses. They both fluctuate in price. You can rent both of them out every single month or every single week if you have an Airbnb. Okay, that's weekly. But the thing is, with the stocks, there's no maintenance. There's no insurance. There's no upkeep. Okay? There's no termites. There's no water damage. There's no overhead. But I still can get a rate of return. So if you just change your thinking just a little bit, so instead of putting $100,000 into the house next door, let's put $100,000 into 281 Dow Street, Dow stock. And it's giving me a weekly return every single week. However, the difference between a house and stock is once you rent that house out, you get that money every month and you don't have to do anything, hypothetically, except for a few maintenance here and there. But a stock, you got to keep your eye on it because it fluctuates a lot faster. And the weekly rental, it changes a lot quicker. Just keep your eye on it. That's all. Pete, can we look at Ford? Pete, we already looked at Ford. Okay. Oh, let's figure this out. So at 685, that's my rate of return on a weekly basis. And it's costing me $2,700. Okay, so let's get my calculator out. I need glasses for this so I can see that far away. Calculator, here we go. Okay, got to bring it from this screen and bring it over to that screen. Here we go. Interesting. Oh, let's get rid of that altogether. Here we go. All right, so the profit right here, 68.50. Now, to come up with the rate of return, you take the profit and you divide it by the investment. Okay, same thing with a house. What is my profit? Whatever the monthly rate is times 12. That's for the year. And then you take the profit for the year and you divide it by how much did the house cost. That gives you your rate of your return or your yield. Same thing. Okay, so to figure this out, $68.50. We want to divide that by what did one contract cost me, or what did the house cost me? $2,732. $2,732 comes to a grand total of 2.5%. Well, that's Dow. Did I write that one down? 2.5. Okay. Now that is for the 28 call option. Okay, remember I said that's the one that I would do because it's the safest one. Well, let's do the 28.50 and see what those numbers look like. So let's get rid of this. Let's get rid of this. Let's change this to 28.50. And let's see what that looks like. So here it is. By one covered call, Dow, 13 June 25, that's next Friday, like we said. The $28.50 call option against the stock at the market to open, blah, blah, blah. Here's the profit, 93. And then here's what it costs. So let's do a little bit of math. Calculator again. Here we go. Calculator, $93 divided by 27.57. Okay, 3.3%. Okay, so let's go back to the chart again. Okay, so back to the chart again. This is where we are right now, 28.18. Top here, came down, now it's bouncing up and going to the top. So it's bouncing off the bottom here, going up. So if I'm going to do Dow, I personally said I would do the 28s because the 28 is a safer trade for me. Okay? The stock is currently at 28.18. So here's the thing. If the stock goes up, I make my money. If the stock stays exactly where it is, I make my money. The stock can even come down a little bit, and I'll still make my money. As long as she stays above 28 by Friday, I'm good. Now let's look at the 28.50. Well, the 28.50 is a little bit more money, but the stock is an upward trend. Can it go to 28.50 between now and next Friday? Well, of course it could. But what if it doesn't? Do you like Dow enough to hold on to it? Well, I want to get in, I want to get out, and I want to move on to the next one. Does it make sense for me to do the 28 as opposed to the 28.50? It's always going to be personal choice, and it's always different for everyone. Me, I'm concerned about safety and preservation of my capital. I'm at a point where I don't have the luxury of being wrong or making a mistake. That's mine. That's for me. I'm at a point where I don't have the luxury of being wrong or making a mistake. So I always play on the safe side. Now, I like Dow. I do. It's on my list. I would trade it. Okay? I'm not going to do it today because, all my money's tied up in my other positions. But it would be a good, strong contender for Monday for me. All right, so let's finish up with the questions. It's past 11:30. I'm just going to finish the questions and be done for the day. Sorry, Lady Foss, I didn't get to Cisco, but it is on my list. Ryan, absolutely priceless info you're giving us here. Thank you for the info and fielding my questions. All righty. John, hello. Crypto smokers. DX, I have no idea what that means. Yep. Thank you there, Miss Laurie. Jimmy Bean. So you don't buy green bananas? No, I don't. I buy bananas that are yellow, just getting ready for those brown spots. That's when they're the peak of their flavor, in my opinion. What kind of business did I used to own? I'm a small business owner. Haphazard. I owned a manufacturing company where I manufactured artificial coral reefs for museums, aquariums, and very rich people. Okay? Did 2 for Michael Jordan, 1 for Larry Bird, 1 for Steve Tyler, Joe Perry. He got 1 too. Scottie Pippen, got 1 for him. Derek Coleman, did 1 for him. They flew me out to Derek Coleman's house in Michigan. That was cool. Got to see his place. Nice spread. They also flew me to Jamaica to install one of these into a nightclub in Jamaica, Runaway Bay. Okay, Jay Knoll. Can you go over the basic time frames you usually look at again? 1-year chart, 90-day chart, 30-day chart, seasonality. 86 is in the house. Look at it again. Sorry, typo. All right. Look at it again. Can you go over the basic time frames you usually look at again? All right. Bo, very helpful to review what you bought on Monday. Good to see. Maybe do that at 10 p.m. daily. Thanks. All right, Bo. Haphazard, what kind of business did you own? Okay, yeah, a manufacturing business. I already said that. All right. That's awesome. I own a landscaping business. I service some famous people as well. Yeah, haphazard. I remember, back in the 80s, okay, we went to Dan Marino's when I was doing landscaping. We went to Dan Marino's place because, someone gave him a 5-acre spread and then they built a house for him. I mean, you're the quarterback of the Dolphins. Yeah, so you get a free house, you get the free land. Okay, they gave him a brand new Corvette, and he gave his wife a brand new, I think it was an SUV. Must be nice. But we were at his place. He was a super nice guy. We had to put in some trees because the fans were across the pond with the binoculars spying on him and his wife and his kids. He said, hell with that. So he took out a lot of the shrubs and put on these big, huge trees to give him some privacy. Anyway, and then he came out after work because we were in Fort Lauderdale because he lived in, I think it was Dustin, something like that. So we were in Fort Lauderdale and it was hot as hell. So after we put the trees in, just before we're done, old Dan Marino comes out with a couple of 6-packs and he starts, giving them to all the guys. And it's like, he was a super nice guy. Wouldn't give us tickets, but he gave us all a beer at the end of the day. Lisa, how to step away? I'm back. Sorry, for not saying anything. Just take care of something. Got it. Pokemon, hello. How is the market today? Like it always is. You are way too timid. You have to speak up. All right, Gary, I'm not quite sure what you mean by that, but all righty. Pokemon, interesting. UNP. Okay. It's RBL. Yep. Okay. I don't do RBLX. We already did that one. Right. How about RKLB? Yeah, no. All right. How do you search companies that have weekly options? Avatar. Okay. You find weekly options specifically. CBOE.com. Chicago Board of Options Exchange.com. You find out every single company that has a weekly option available. Real Rugged Dude. Okay, I got it. RBLK, whatever. I think the charts are flipped for the YouTube watchers. Yes, they are. The charts are flipped. Yep. Moo Cow. I am watching this stream on my Apple LLE while playing the Oregon Trail. Why are you so green? Don't know. All right. Deck symbol. Okay, we already looked at deck earlier today. XRP is a cryptocurrency. Well aware of that. United Healthcare has a nice dividend. Yep, they also had a big drop. What about Coca-Cola? Iceman, how you doing? Iceman, Coca-Cola, the options, the premiums really aren't that great. I very rarely ever buy Coca-Cola. Dino, H.F. Sinclair, not quite sure what that means. I feel like when I wait to find a bottom in a chart, it finds a new high before I buy. Okay. The Real Oak Tree, ADA. Okay. I have no idea what ADA is. Now we're past 11:30, but he did ask nicely. ADA is a no, dude. No options, no thank you. John Doe, how do I know a stock is going to fall in price? You don't know. Okay, the Real Oak Tree. Do I do crypto? No, I don't. Don't get me wrong. I love the idea of crypto until they figure out a way where I can get a safe, predictable, consistent 1% a week with crypto. It's just a dream for me. Now, I like the idea of it, but no. We will never forget what you did to that little girl. That's a horrible thing to say. Whether it's true or not is totally irrelevant. You do not come to a public space and say something like that because you can never unsay that. Whether it be true or not is absolutely, I don't even know how you could even say something like that. That's a horrible thing to say. Hello, James. Thanks for the explanation. You're welcome. U.S. Army repairman. Daniel Berry. Happy Thursday. You got it. Appreciate the sharing. You're awesome. Thank you. That's awesome, dude. Thank you. Hi, hi, hi. Elber, back again. Everyone leave a like. He's giving free info. Thank you. Texas Shack. Good evening. Mike, what's going on? Just me, 50%. That's awesome. Okay. Toomey, good evening, Toomey. Tesla to 225 long leaps. Yep, I don't do Tesla. They don't have dividends, so no. Lisa, I just want to say I appreciate the information you're giving. It takes me a little while longer to learn, but I am slowly understanding more and more. Lisa, it's a process. Everyone's different. Some people are quick, some people are slower. Not bad. Elber, good evening. Juice goals. You old people should be buying Bitcoin. Explain to me a manner in which I will understand. How do I get a safe, secure, predictable, consistent return on Bitcoin without having to sit in front of my computer all day long? It has no options available. So how do you do it? There is no way. Until there is a way where you can simplify the rates of return on a consistent basis with something that has nothing to back it up, I'll be more than happy to look at it. But you don't. It's all, let's call it pie in the sky. You're relying on that guy who's relying on that guy who's relying on that guy. So you're all relying on each other saying it's worth something when it actually has no value whatsoever. The only value Bitcoin has is the agreement between people that are using it. That's it. That's the only value Bitcoin has, or any cryptocurrency has. They have nothing backing it up. Well, granted, the US dollar doesn't have anything backing it up either, but it used to. Anyway, Apple II, it is a computer us Gen X folks use to use. Yeah, I get that one. Thanks, James, for your insight. You're welcome. We got ticker Dino. Company is HF Sinclair. Please take a look. Dino, D-I-N-O. Hell no. Come on, 3A Ghost, you've been here long enough. You know I don't do that. STZ, Constellation Brands. STZ. Interesting. Unfortunately, it's in a downturn at the moment. Look at that. Okay, had a bottom the other day, went up 2 days, but today it pulled back. Not quite at the bottom yet. Well done. In your opinion, in your option strategy, the more I understand it, the more genius I realize it is. Well, Avatar, thank you. I'm going to take that as a compliment. Thank you kindly. All right, so I finished up with every single question. Oh, Vincent, you like that rental house example? Well, it's very challenging for people to understand what an option is. It's basically, the right to do something. But if you think of it this way, like the rental house, okay, a rental house is going to cost you X amount of dollars, and it's going to give you a return every single month. Well, this is almost the exact same. It's going to cost you X amount of dollars, and every single week, it's going to give you a return. You just got to pay attention to it. Now, you don't have to go out and rake the lawn. You don't have to trim the trees. You don't have to take care of the plumbing. You don't have to do anything with stocks. Real estate, you do. And the funny thing is, real estate is not liquid. You can't just say, all right, I'm done. I want to get out. You can't do that with real estate. It takes weeks. It takes months, sometimes even years to sell a piece of property. Stock, I can sell it within 2 or 3 seconds if the market is open. And the market's open 4 or 5 days a week, every single week. What's your favorite ice cream? I would say like this coffee espresso. Go have some this weekend. I hope it's good. Good night. Chris, more than likely, I'm going to have my coffee ice cream with either a little bit of Bailey's on top or some Kahlua on top. On top of what do you call that? Pound cake. I see, one of my favorite desserts is you take a pound cake, slice it nice and thin, put butter on both sides, and then you grill it. Okay? You grill it on the stove in a frying pan. So kind of like grilled cheese, not like grilled cheese. Well, you're using pound cake, and then you grill both sides of it. And then while it's still hot, you put your coffee ice cream in there with a little bit of Kahlua, and oh man, it's freaking fantastic. Oh, never mind. Yeah. Okay, well done, your opinion, thank you. Wisdom of life. I like the 1% weekly profit. That's what I started to do recently, and it has been good for me. Awesome! Cool beans. I really like the coffee espresso ice cream. It's yummy. Yeah, but try to put a little bit of Kahlua on top or Bailey's. Oh, just a little bit, not a huge amount. Brandon, can you explain when you close your covered call and sell your stock? Well, I let it get called away. I don't sell it. I let it get called away. So I keep doing a covered call until it stops being profitable. Like I'll give you an example, U.S. Steel. Okay. You see what U.S. Steel did recently? Now, I've had U.S. Steel for a couple of months. I bought it at 41. 41 is here. Okay? Every single week, I took my U.S. Steel and I rolled it forward. And I got another 1 to 2% every single week. Well, 2 weeks ago, she went from 42 and jumped up to 54. And it hasn't come back then. But I can't roll it forward and get 1 or 2% anymore. So I'm just going to let it go and just take all the profits. Because at some point in time, they stop giving you a 1% rate of return. That's the time where they jump up like this. Say, all right, let it go. And then I go buy another one. So when U.S. Steel comes back down again, then I'll jump into it again. But until then, I bought it at 41. She jumped up. It's not giving me 1% anymore. So just let it go. Take the profit. Say thank you very much. I will see you next time. Because I will buy U.S. Steel again. Because it goes up, it goes down. All right? That's it. It is 11:45. I am done for the week. Oh, who's that? Tyler! What's going on here? Tyler, how are you today? You're new here, Tyler, so let me briefly explain. Tyler, what I'm doing here is a simple, safe, predictable, consistent 1% per week trading strategy so that I can get a 50% return every single year. Now, you don't know me from Adam, but if you did, you're on YouTube. So here on YouTube, you can go take a look at my website, the10minutetrader.com, on YouTube, and you will see that I have been here for a very, very long time, and you're new here. So simple, safe, predictable, consistent, 1% per week using nothing but pre-qualified dividend stocks. And those are companies that are consistently profitable for 2 decades or more. Because it doesn't make sense to put my money in anything that's not consistently profitable. But you're new, you have a great day, and thanks for stopping by. Thanks for saying hi. But I'm done for the night, and I'm done for the week, and I will see you guys again on Sunday. And now the end is near, and so I face the final curtains. You guys have a great night. My friends, I'll say it clear. I'll state my case, for which I'm certain. I've lived a life